We're talking about some more earnings. Pidilite managed to miss the street estimate, especially when it comes to the margin performance as well. Let's try and understand what went wrong and more importantly, what's the outlook going forward. Mr. Bharat Puri, he's the MD at Pidilite Industries, joins us on the show. Mr. Puri, hi, good afternoon. Thank you so much for making time and speaking with us. Well, revenue declined on a sequential basis. Is this more on account of the volume decline or is it more pricing led? Could you help us decode that?
See, in our business, the 4 quarters are not equal. So actually looking at sequential growth is frankly not the correct way of looking at growth, because for us, the third and then the first quarters tend to be much bigger than the second, and actually the fourth is the smallest quarter. So my advice to you would be look at the yearly growth, or if you look at quarter over quarter, that's the right way of looking at it. If you look at the year, we've had very healthy growth. The consumer businesses have grown over 20% by value. They've grown double digit by volume. If you look at this quarter, the consumer businesses again have grown about 10% by value and about 7% by volume. So overall, quarter up to our expectations. We're in the process of doing some route to market corrections in one of our businesses, the Araldite business. So this quarter, for example, that would have impacted growth by about 100, 200 basis points, but that's part of the game.
Mr. Puri, let's talk about growth, how it has really panned out across the all the other segments, C and B, B2B. What are the early demand trends that you are witnessing?
See, if you look at our overall performance, actually it is fairly broad-based across both categories as well as geographies. So our core businesses, whether it be Fevicol, whether it be Feviquick, whether it be our maintenance businesses, when we look at our growth businesses, waterproofing has done very well for the year. Across the board, therefore, if you look at it, it's been fairly broad-based growth. The core businesses have grown a little above GDP. The waterproofing, etc., businesses have grown way above GDP. So really, as per expectations, value growth, as I said, has been 19%. For the organization, for consumer and bazaar, it's over 20%. And the B2B growth is the one that has been muted for the year. The year's growth is about 13%. We're seeing Western markets, especially Europe and the US, wherever we have exports or our customers have exports, we're seeing a direct impact of that. So our pigments business is massively impacted as a result of the near recession in the Western markets. So really, if you look at it, the consumer and bazaar businesses are motoring along well. B2B businesses are suffering strain largely internationally. Coming to demand conditions, the good thing is we're seeing a gradual return to demand in rural and semi-urban areas. For the first time in quarter four, the growth in rural and semi-urban was actually better than the growth in urban. Too early to say, we'll wait for the next 6 months, but we expect gradually rural and semi-urban growth to improve. The other tailwind, of course, we have is the spending on infrastructure, the spending of construction is at I won't say at an all-time high, but is increasing on a consistent basis, and we're seeing the benefits of that.
Now, Mr. Puri, point taken, but as you did flag out, the B2B businesses face some headwinds due to lower exports as well as lower demand from business dependent on exports as well. By when do you see a recovery when it comes to the international operations?
See, it's clear that in the Western markets, so for our pigments businesses or where our customers export, whether it be leather or it be textiles, I think this is not something that is going to correct over the next 3 to 6 months. I think over 6 months you will see some amount of stabilization. But clearly, businesses dependent upon the international markets or export to international markets will remain muted for some time.
Right. Mr. Puri, your margins this time round have been in the range of 16 to 17%. In fact, for some time now. When do we actually see margins going higher? Considering that raw material prices overall seem to have peaked out. Do you think the material prices can remain low and your margin can eventually come out of this range on the higher side?
See, we've always said that as VAM prices, which is our principal raw material, moderate, we will see an improvement in our margins. You would have seen already an improvement, a substantial improvement in our gross margin in quarter four. If you look at our exit March, because obviously in Jan-March we were also consuming a lot of raw material bought earlier, but if I look at my exit March margins, we will be back to the range that we are comfortable in, which is the range of between 20 and 24%. In our belief, The gross margins will be back in the first quarter itself because right now raw material prices have moderated and are stable. Now it's up to us how much of that we reinvest back in consumer facing initiatives.
Mr. Puri, Pidilite definitely is the leader when it comes to the space, but there is increased competition coming in from paint companies and waterproofing as well. How is this competition impacting your business, and would you be going more aggressive into decorative paints, etc.?
See, we're no strangers to competition. If you're the leaders across which we are, fortunately for most of our categories, you will always have competitors nipping at your heels. Our simple credo is as long as we delight the consumer and the customer a little more than everybody else, we will continue to maintain our lead, and that's frankly what we're doing. Competition continues. The thing with areas like waterproofing is this is still a growing area because, as I've repeatedly said, it's only 4 out of 10 homes in India that do any proper form of waterproofing. And therefore, the job of the leader is to make the 4 into 6 or 7 rather than worry about share within the 4. And therefore, we see waterproofing as a runway with a lot of growth. As far as decorative paints is concerned, we've had a demand from a lot of our dealers over a period of time. You would appreciate that we actually call on more paint outlets than most other paint companies, barring the leader. We've had a lot of demand from our dealers to, we already were in the paint business because paints and waterproofing overlap. So we had exterior waterproofing come paint, so on. We had a demand from our dealers to complete the range. Now we've completed the range in a sense and therefore launched a full range so that dealers are happy to deal with us across the whole range. We've launched that in a few select geographies. We'll study the response, but this is not a major initiative on our part. It's more to complete our range.
Right, Mr. Puri, do you think that fiscal 24 for the company could be better than FY23? And also, if you could share your view, visibility, guidance on margin, volume growth in the next few quarters?
See, we've always consistently said that we correlate very well to GDP growth. We always like to grow our business at between 1 to 2 times GDP growth, depending on the economic conditions. That's what we would hope to do in the new year. The good thing is, we would expect obviously improved margins in this financial year simply because raw material prices have moderated. That is a good tailwind for us, and therefore we would see, what we see as our normal margin range returning in this year.
Okay, Mr. Puri, on that note, we'll let you go. Appreciate you making time for ET now. In the meantime, let's flag out some of the stocks which